And for more on the macro picture affecting equities markets, Jack Lowenstein, the Co-Chief Investment Officer at Morphic Asset Management, joins me live from our Sydney CBD studios. Jack, what are you expecting from the Fed minutes? Are you going with a December hike? And what would the minutes have to say to underscore this stronger bet on a December rise?
Look, I'm absolutely certain there's going to be a hike in December. We've been saying that for a long time, as you know. And I think it's more a question of what the minutes have to say to discount the prospect now, and I think it's very unlikely they will. Right,
so you are feeling very bullish, are you, about what's going to happen?
Look, I think the thing that's perhaps taken even us by surprise is that while expectations that the Fed is going to go on tightening monetary policy have probably been clearer than we expected, the economy in the US is doing even better than we expected. Job numbers are going up, unemployment is falling, and unemployment is falling even though more and more people are looking for jobs again. So this is very encouraging, and we also expect a bit of a short-term blip from the cleanup after the cyclones. Rather like we saw in New Zealand, natural disasters are terrible for people to get caught up in them, but the economy actually benefits from the cleanup.
Well, it's interesting on leaving the economy to one side, and that's all part of, I guess, my next question. As we head towards the 30th anniversary of the 1987 crash, we are seeing US stock markets in very heady territory. I mean, they just keep going up. They seem to ignore tensions between their president and North Korea. They ignore hurricanes and the huge damage from them and the earthquakes. They ignore stagnation in the Congress. They ignore the worst mass shooting in recent US history, continue to march higher. Now, at this point, should we be wary or confident that the upwards march will continue?
Well, it won't continue forever, but we think there's a fair bit to go yet. To refer to that 30th anniversary, this weekend will mark the 30th anniversary of one of the formative events of my life, which was the October 87 crash. US markets are up 13 times from their pre-crash high. Australia's only up 7 times. That's an interesting statistic for you. We feel that the upward momentum in economic and corporate earnings in the US is so strong, we should see a very good end to the year. I wouldn't be surprised to see a succession of new highs really leading right up to Christmas.
All right, and it really is underpinned by these very strong earnings that will continue?
Yes, I guess the other thing that is now beginning to be factored in, not fully factored in, but beginning to be, is the prospect for tax cuts for companies.
Although we're hearing that their plan might change. I mean, there's obviously going to, it's not going to be as strong, you would think, as Donald Trump first promised.
I think some critical elements will still be there, particularly the repatriation of foreign profits at a tax rate of 10%. And that will spur another round of share buybacks and so on as all that cash comes back into America. So all this is going to help the stock market as well as helping corporate earnings.
All right. Does that mean you're going to be more invested than you perhaps have been of late in US markets?
Yes, we are fully invested. We have been slowly shifting our money very slowly from emerging markets back into developing markets, and the US is part of that.
Okay. Now, what is going to move Australia's markets, which really have been trading in this narrow band, and they have not been going ever upwards?
Well, part of the reason for it is the narrowness of our market, i.e. the domination by 4 banks, which are the coming towards the end of a very strong property cycle, and of course the 2 big miners. So I think that's the problem. We hadn't had the growth stocks that have meant that America's done so much better than Australia over the long term.
And the tech stocks, I guess you'd have to say.
Tech and growth, exactly.
They just drive that innovation there.
Correct, yeah. Now, I mean, and that's why, we always say to people that the biggest lesson from the 87 crash is diversify. Because although Australia has recovered a lot, it hasn't recovered nearly as much as the rest of the world.
So are you saying the Australian economy needs to diversify more? I mean, here we are talking on the energy debate. Some energy-intensive manufacturing companies are really saying, we might have to go offshore, that we won't even have them, potentially.
Well, that is a concern. That will result in a further narrowing of our economic base and a further narrowing of the Australian stock market.
Yeah. Jack, I want to ask you about sort of a side issue, but an important one. I'd be interested in your views on the Adani mine in the Galilee Basin in Queensland. Now, obviously, the Queensland Premier, lots of people want this mine to go ahead for jobs and a whole lot of reasons in that part of Queensland. But there's also this additional issue of the possible $1 billion loan, taxpayer funded loan for the rail line to the port from the Northern Australia Infrastructure Facility. What is your feeling about both those obviously tightly joined issues?
Well, I've got to say, I just don't get it. As I think you retweeted the picture of me standing on Bondi Beach protesting on Saturday. And I don't get it because I think
yes,
it's
that was very
environmentally
socialist
crazy.
of you, Jack, really, to be going to a protest march.
Look, we are human beings as well as fund managers. I know it's hard to believe there's a combination like that, but it does exist. But the thing that really has me scratching my head is that I've been investing in India for many years, you know. All my
in India,
India, all my Indian stockbrokers tell me steer clear of the Adani family. They're not trustworthy to invest with.
Why didn't you tell us this months ago? We could have talked about it over the last several months.
I'm sorry. Well, I'm here to tell you now. I don't get why the Australian government wants to help some very financially fragile companies. Here's some facts for you. The Adani Power has about $7 billion of debt for a market capitalisation of about 1.8 billion. So it's a massively overgeared company already struggling. It's about to sell 51% interest in its power plants, which are basically bankrupt, to the Gujarat government for 1 rupee for the lot.
Yep.
So it's really just trying to get some of the debt off its balance sheet. And meanwhile, its environmental and labour record is terrible. Just this week, it's been arraigned for the death of 7 workers in Bombay. And it's also been taken to court for environmental abuses at its huge Mundra combined port and power station complex.
All right.
So that's just this week.
Yeah.
So why does the Australian government want to get into bed with a company which has simply terrible industrial relations and environmental record and is very, very financially weak as well? I don't get it.
All right. Jack Lowenstein, we'll have to leave it there. From Morphic Asset Management, Co-Chief Investment Officer, thank you for joining us.
Thank you. Bye-bye.